Alright, gang, it's your boy Nature, aka Nature. Alright, so we already went over the quizzes. We went over the quizzes already. So we're gonna get back to teaching, um, you know, and how to make more money into this market. So we're gonna get back to the teaching. We're gonna go over important chart patterns. Alright, it's a few of them. We just gonna do one or two at a time, you feel me? And then that's how we're going to do it. Alright, so these videos going to be short, straight to the point. So let's start the video, gang. So how to trade bearish and bullish pennants. Alright, so bearish means sell and bullish means buy. And it's called a pennant. So it's similar to the rectangles. Pennants are continuation chart patterns formed after a strong move. So after a strong move, that's when you see a pennant form. And pennants are continuation patterns. Alright, so after a big upwards or downwards move, buyers or sellers usually pause to catch their breath before taking the pair further in the same direction. Because of this, the price usually consolidates and forms tiny symmetric triangles, which are called pennants. As you can see, the triangles are being formed from the support to the resistance. You can see the first triangle, then from the resistance to the back, from resistance to from back down to support to resistance. Another one formed. Then from resistance to support, another triangle formed, and then from support to resistance, you can see another triangle being formed. So they actually do draw, triangles and symmetric triangles, which are called pennants. All right, so which the price is still consolidating. When you see pennants or being triangles like a triangle formation, it means that price is still consolidating. More buyers or sellers usually decide to jump in on a strong move, forcing the price to burst out of the pennant formation. Alright, so it will make a strong move and eventually burst out of the pennant formation, going up or down. So for bearish pennants is formed during a steep, almost vertical downtrend. Remember, pennants are, as you can see right here, pennants are continuation chart patterns that are formed after strong moves, no matter if it's an uptrend or a downtrend. So a bearish pennant is formed, bearish means going down, so a bearish pennant is formed during a steep, almost vertical downtrend. So pennants are continuations, so a bearish pennant is a continuation of a downtrend. It formed during a steep, almost vertical downtrend. After a sharp drop in price, some sellers close their positions while other sellers decide to join the trend, making the price consolidate for a bit. So it usually forms after a strong downtrend, almost vertical, as you can see right here to the left of the picture. This is a downtrend. It's almost a vertical downtrend. That's when the pennant forms after a sharp drop in price. Some sellers, a bearish pennant, as I can say, because it's during a downtrend. After a sharp drop in price, some sellers close their positions while other sellers decide to join the trend, making price consolidate for a bit. So it formed during the downtrend. This is the brief consolidation. You see the triangle formation, meaning it's a bearish pennant. As soon enough sellers jump in, the price breaks below the bottom of the pennant and continues to move down. So as you can see, eventually sellers came in, pushing price back down, and the downtrend resumes. It continues. As soon enough sellers jump in, the price and breaks below the bottom of the pennant to continue the move down. So as you can see in the picture right here, price will go from the same distance of from the downtrend to where the downtrend resuming. It's going to be the same distance, might even be a little bit further. Just letting you know that. As you can see, the drop resumes after the price makes a breakout to the bottom. So once price breaks out of this pennant, this triangle pennant or bearish pennant, price continues to resume to the bottom. So to trade this chart pattern, we will put short orders at the bottom of the pennant with a stop loss above the pennant. So you will push your stop loss above the pennant, and you will push your short just after the breakout, or after you see price break out of the triangle. That's when you would push your short order in at the bottom of the pennant with the stop loss above the pennant. All right. That way, we'll be out of the trade right away in case of a breakdown or a fake out. Sometimes price will fake out and we'll go in the opposite direction. It's just a fake out. We thought it was going to continue in that direction in the downtrend, and it just faked out and went back in the upwards trend in the opposite direction. Sometimes price will do that. That's why they say push your stop loss above the pennant, just in case price does reverse or it's a fake out and price wants to reverse and go the opposite direction. So stop loss is always, stop loss above is important, and below. So be aware of fake outs. Unlike the other chart patterns, whereas the size of the next move is approximately the height of the formation, pennant signals much stronger moves. So when you see pennant signals and they make triangles, those are stronger moves, consolidation moves. Like once price consolidates out of that pennant, is going to move strong in either directions, and it usually is going to be the height of the earlier move, as known as the mass, is used to estimate the size of the breakout move. As you can see right here, this is the mass. It's the blue line with the two lines across from it. It's called the mass. They use this to measure or to estimate the size of the breakout move. So you can see the breakout move is the same exact measurement as the downtrend. Due to the mass, they use the mass to estimate, how far price will continue to drop down. So that's why it's known as a mass. And they use it to estimate the size of the breakout. So now that you know about bearish, which means going down, it's a continuation pattern. When you see a bearish pennant, it's a continuation pattern going towards a downtrend. Same thing with the bullish pennant. The bullish pennant is a continuation pattern too, but if bullish means going up, so it's a continuation pattern that's going up, called bullish pennant. Just like the name suggests, signals that bulls are about to charge again. This means that the sharp climb in price will resume after the period of a brief consolidation, when bulls gather enough energy to take the price higher again. So it's a brief period of consolidation, and then when bulls gather enough energy, they'll take price higher again. They'll push price higher again. In this example, the price made a sharp vertical climb before taking a breather. I can hear the bulls stomping and reviving up for another run. So it went up, and then it took a short break. All right, and then just like we predicted, as we can see with the mass is to determine how far price will actually move after it breaks out of that, that bearish pennant. Just like we predicted, price made a strong move upwards after the breakout. So after the breakout, price made a strong move upwards. It's called a bullish pennant. To play this, we'll place our long. To play this position, we'll place our long position, which means buy. We'll place that above the pennant, above it, because we know that price wants to continue going above, wants to continue going up, and we'll place our stop loss below our stop, and we'll place our stop below the bottom of the pennant to avoid fake outs. Price could do a fake out and can continue to go in the opposite direction in a downtrend. But for bullish pennants, is a continuation pattern that price wants to continue going up. For bearish pennant, it's a continuation pattern that price wants to continue going down. So I want you to be familiar with this. This is a short video. We're going to cut the videos in half so you guys can just study this, and then this pattern, and get familiar with this pattern, and then we're going to do more patterns. We have a few more patterns that we have to do. So like we discussed earlier, the size of the breakout move is around the height of the mass or the size of the earlier move. So the breakout is the same size of the earlier move. You can see the uptrend is the same size of the earlier or current uptrend. So that's why they use the mass to see, so we can determine how far a price, or estimate how far a price will continue to rise. So you can see the pennant may be small in size, but they are considered signals, huge signals that price wants to move up or down. So don't underestimate them. Okay, so these are pennant these are pennants, bullish and bearish pennant. In our next video, we'll discuss a little more on how to trade these patterns. We're going to talk about the next pattern we're going to talk about is how to trade the triangle chart pattern. Okay, in the next video we'll talk about that. It's kind of similar to the bullish and bearish pennants. It's kind of similar to the bullish and bearish pennants. So in the next video we'll discuss that. All right, and how to trade it. Okay, it kind of looks a little like the bullish the bullish and bearish pennants. You can see the triangle formation, but in this video we're going to discuss it a little bit more, how to actually trade that, how to trade this pattern, and what to expect once this pattern forms on the market and forex. All right, gang. So I hope this video will help. Make sure you check out the next video. All right, gang. It's your boy Nature, aka Nature, gang.